Hello everyone, James Baker here, and today I have a special guest for you, and I have a really awesome conversation coming with Mr. Peter Paulson from Frost Tax Law. Very experienced, he knows what he's talking about, and I'm very excited to have him on the channel because we're going to talk about really detailed information as to what's a trader business, what is Amazon looking for, like how to set up your company, what form should you file every year. Very interesting stuff, and Peter's going to be coming with a case study and all of that. And before I forget, I put the link to their channel in the description below. Make sure to check out his channel. He has some great content, some new stuff coming out about Puerto Rico and the tax incentives out there. And you should check out their channel. They talk about a lot of stuff that we talk about in a little bit more, probably more technical and more thorough.
Haven't done my taxes, I'm too turned up. Haven't done my taxes, I'm too turned up.
Peter, thank you for being here. We're really excited to have you.
Well, it's great to be here, Jim. I really like your content. I think it's among the most practical and thoughtful out there with respect to the challenges that people face trying to do business in the U.S. I like the way that you use real people and real fact patterns. And today, I brought you a fact pattern.
Perfect. Perfect. So what do we got?
Okay, and just to be clear, we're going to focus on U.S. income taxes today. So there's a whole bunch we could say about sales taxes, state income taxes. We're not going to talk about the foreign consequences of this. So we're really going to laser in on the U.S. Federal income tax consequences of this particular individual and the fact pattern.
Perfect. So yeah, that's what we specialize in, right? U.S. taxes.
Exactly. Yeah. And so what we have here is we have an individual in Mexico who is not a U.S. citizen, not a U.S. tax resident, no social security number, no I-10. And this person is selling product using the Amazon FBA service. So maybe, Jim, you want to talk a little bit about what that is because it's relevant to our discussion throughout.
Yeah, so you probably have heard of Amazon if you're watching this video, I'm certain. Amazon FBA is a simple concept where you ship them a ton of your inventory and they have certain minimum requirements. And from there, Amazon does whatever they want with it so they can sell it. So they have a lot of same day, 2-day delivery options. And depending on what you're selling, you send them a lot of inventory and then Amazon holds it and kind of sells it on your behalf. And they do all of the fulfillment. And when I buy something, Amazon sends it to me, even though it's your product. So it's really inventory managed by Amazon is what the FBA is, right?
Yeah, and 60% of the sales of Amazon come through, are not Amazon, are through these FBA type sellers. So it's very common distribution channel, particularly if you're outside the United States, you don't have somebody that can hold your inventory and fulfill. So it's valuable. I understand Shopify also now has a fulfillment service as well. So becoming more
I didn't know that. Yeah, there's a lot of, and we can maybe talk about this later, but there's a lot of fulfillment like houses and like businesses that do fulfillment that are outside of Amazon, but we can dive into that later.
Okay, so this individual is using Amazon's platform and fulfillment services to market and get products to customers. The individual owns a single member LLC in Texas. Why? Because you have to get a U.S. bank account. Banks generally won't open bank accounts for people outside the United States. So you set up an LLC, the LLC gets an EIN, and then they can open a bank account. You can collect payments into that U.S. bank account in dollars. You can pay the factory, your Shopify fees, whatever, out of that U.S. bank account. So you don't have to convert into pesos and back into dollars. And it saves money and it's just easier.
Yeah.
The individual has a U.S.-based mail forwarding service. So in case there are returns, that comes through the mail forwarding. It goes back to the U.S. address, and then it's whatever the individual wants to do with that. Return merchandise, it'll be done. And then if there are casual sales back into the U.S., they might use the forwarding service. The individual has a U.S. Skype number. So if there are orders to be placed or customer service issues, the customer in the U.S. can just call a U.S. number and it rings over to the phone number or the phone in Mexico. And as we've discussed, and really most significantly for this discussion, there is inventory in the United States. And so, Jim, it's like moving into an apartment and you buy, the couch, and then you buy the table, and then you have your flat screen And after a little while, you look around and you're like, wow, I've got a lot of stuff. And this is a lot of stuff in the United States. And I think someone with this kind of stuff in the United States is going to ask two questions. One, what do I have to file? Number two, do I owe tax to the U.S. on any or all of this stuff I have?
Yeah, so that's kind of there's certain forms that we have to file, and I'll talk about those in a second, but kind of understanding where the income is going to be taxed almost comes before, because if you have to pay tax in the U.S., the way you file the forms is a little bit different than if you don't. But let's assume in this situation that there's no tax to be paid in the U.S. because there's no U.S. trade or business, which we're going to discuss. A foreign-owned single-member LLC has to file Form 5472 each calendar year if there's reportable transactions between the owner and the LLC. And this is filed with a pro forma Form 1120 due on April 15th. If there's multiple members to the LLC, they have to file Form 1065, which is a partnership tax return. And if it's a C corporation, you file Form 1120. And if that's, you can be an LLC with an election or an actual C corporation. Those are the three most common tax filing scenarios and requirements. And what to report on those forms is really what's kind of most interesting, right? So the 5472 filing is kind of always required, but then we determine whether or not the 1040 has to be filed. So do you have like some thoughts on that?
Absolutely. And I think it depends, we'll talk later or shortly about whether there's enough of a tax presence to create a U.S. tax liability.
Yeah.
If you have a tax liability, either as a single member, multi-member, whatever, if you have a tax liability, then you'll have to file an individual return Form 1040-NR. But even if you don't have a tax liability, you might want to file one anyway on a protected basis because, as you know, Jim, the penalties here are pretty draconian. If you don't file that Form 5472, you can have a penalty of $25,000.
And that's automatic. And if you file, the biggest thing is if you file it a day late, they just send it automatically to you. And I'm sure you've seen the letters. It's crazy because it's a civil penalty. You can't even call the IRS about it because it's with a different division that doesn't have a phone. You write them letters and they just never get back to you. I don't know, we didn't plan to talk about this, but I sent some penalty abatement requests like a year and a half ago, and they just send every 60 days, they get it. We need another 60-day letter or 30-day letter. So we don't even have responses on most of those still. And I've done a couple of them recently.
Yeah, so that's a significant cost. When you're selling $120,000 in nutritional supplements a year on Amazon and you get hit with a $25,000 penalty, that is huge. This is not a proportional penalty, for big companies or small companies. It's just one size fits all.
It's a flat civil penalty.
You're at the mercy of the IRS computers for a lot of this. The other thing, draconian thing that can happen is if you don't have a taxable presence, you don't think you have a taxable presence as a result of all this stuff, and the IRS later determines you do have a taxable presence and you don't timely respond to that, you can actually be taxed on your gross income and you're not allowed to take deductions.
If you don't timely respond to the IRS notices, right?
That's right. Yeah.
Okay.
There's a whole lot of procedural aspects of this particular rule, which can disallow expenses. And the idea is the IRS has a hard time identifying who is out there that's not filing that should be filing. And
I think they're going to be getting better at it with this next 2022, the Corporate Transparency Act coming up. But real quick, I want to take one step back because I didn't plan to ask you this question, but I want to ask because I'm curious and I get it all the time. With this $25,000 penalty, if it gets assessed and that person just doesn't pay it and they close down their LLC, does that pass on to the owner? Does that civil tax like become a tax of the owner of the LLC, or does it stay with the LLC and can they close it? Like how practically, how does that work? Because I haven't experienced that.
Yeah, that's a good question. And I really, I kind of like most of my career, I've not lived in a world of people just like not paying these things they're supposed to pay. So that comes up too with like Wayfair and the sales tax issues. And if you get assessed like a sales tax liability or even an income tax liability now under Wayfair in some jurisdiction, can just not pay it.
Yeah, the owner lives in Mexico. He's a Mexican citizen. U.S.
Yeah.
Like how do they go after this guy? When do they do it? How does that work? Do they have it on his record? Can he get a green card later? You know, does that, like, those are the questions I kind of get. And I'm like, oh, I don't know is my answer.
Yeah. Yeah. So, we are a controversy firm. Mostly we deal with controversies like this, but I haven't been involved in a case like what you're talking about where somebody just says, try to get it, from me. I've shut down.
But you can imagine, I mean, you can imagine it comes up. If the guy sold $20,000 of supplements and the site doesn't want to do it anymore and he gets a penalty, he's not going to pay that. It just doesn't, like, he can't pay it.
Yeah.
And he's not going to fight it. He doesn't want to pay anyone else to fix it. He just wants to sweep it under the rug, and it's a small thing. I'm sure there's a lot of people like that because I've just had people ask me about it, and I can tell, like, their business is small. They're just testing stuff out, and if they file it themselves, they do it wrong, they get the penalty. They're just never going to pay it. So, we can move on, but I guess you don't know the answer to that either because I've never experienced it.
No, and I think that, if you're in this position, like you're the Mexican individual who's selling products on Amazon and you get worried about these tax liabilities, and you have inventory with Amazon in the United States, you can just kind of say, well, can the IRS file a lien against my inventory? And all of a sudden I can't fulfill my orders. And you start, if you like compound all of these problems. And
that's more likely. That's what I've told people. I'm like, look, if you keep a U.S. bank account, the IRS with the company name, the IRS certainly could lien and take the money from that account.
Yeah. So I don't want to get everybody worked up too much.
Yeah, I know that's a niche scenario, but I just wanted to ask real quick. But we can keep going because we have a lot we want to discuss.
Yeah. So and you talked about, I appreciate your discussion about the type of forms you have to file in the annual filing season, the 5472, 1120, 1040 NR, maybe a couple other reporting events too that you might want to comment on because you've got the better experience. But when you sign up for Amazon, they're going to run you through a tax interview because they need a form from you. And that form could be Form W-8 or that form could be Form W-9. Maybe you can talk a little bit about that.
Yeah. So what form do you give the IRS what form do you give Amazon when they're requesting it? The W-9, the W-8, the W-8-BEN, the W-8-BENE. And in my experience, what I've seen clients do, if they have a multi-member LLC, they'll give a W-9 because they're like, yes, it's a U.S. partnership. And when they have a single member LLC, if they're a foreign person, they should be giving a W-8. And if the Amazon accepts a W-8, I say W-8, W-8-BEN, then that works. But let me take a step back because I'm kind of skipping things. The W-9 is a certification of U.S. taxpayer. So if you give someone a W-9, you're telling them, you're certifying, you're signing that you are a U.S. taxpayer and you pay taxes in the U.S. If you give them a W-8-BEN, you're telling them you're a foreign person and you're identifying yourself as a not U.S. non-resident, non-taxpayer, and the W-8-BEN-E is for foreign companies. So, and there's the W-8-ECI, and that's a foreign person who is paying taxes. So this form isn't sent to the IRS. It's held internally in case there's an audit or an investigation of the person who's asking for the form. And from what I've seen, a lot of people just send the W-9 because they ask for a W-9 and they just fill it out. They put the LLC name and the EIN and then they sign it. And I don't, what implications are there for sending in the wrong form?
Well, I think to a large degree, it's the obligation of the person who is making the payments to you to collect the right form. Yeah. And Amazon takes this responsibility very seriously. They have, I like to say that the IRS has 250 million customers and they have 70,000 people. Amazon probably has 250 million customers. They have 70,000 people. Amazon probably has 250 million customers. They have over 1 million people.
Yeah. Okay.
Good systems, outside contractors, consultants. So they really make a strong.
And they're held accountable by the government pretty strictly. They're looked at, so they have to be really on top of it.
They are, and they really don't want to be looked at any more than they are looked at. So they'll put up their own systems, and they have a tax interview process they run everybody through who wants to sell on Amazon. That form they use, it's like 3 or 4 page outline for the interview is actually on the internet. It's no secret. I mean, they want to kind of ask a lot of questions, and the questions they ask are on this form, and they ask about the kind of activity you're conducting in the United States. And this is a form, whether you're a U.S. person or a foreign person or a single member LLC or multi-member LLC. So they go through a rigorous process. And at the end of the day, I would feel comfortable that they're going to collect the right form and that they're going to ask enough questions. And they specifically say, if you've got a single member LLC, don't give us a Form W-9. You're going to have to give us a Form W-8. So I think they do a fairly rigorous job. There might be other, maybe less big companies who don't go through this much of an exercise that might be willing to just take the W-9, because that's usually what people give them, because most of the people that are dealing with them are just U.S. people, and that's what U.S. people
That's what they're looking for also. They're looking for it. It's easier for them. It's not different. And I'm not sure if they do that right away, because I've worked with a couple of clients recently who went through the process of like, how do I sign up? What EIN do I use? What number? And they didn't, my clients didn't ask me about this interview question process. And also that I don't think they filled out a separate W-8 or W-9, because usually they ask me to give it to them. And I think the Amazon kind of populates their own W-8 via the questions, and maybe they have to sign it digitally when they advance or something like that, because it might be more efficient for them to do it that way. Because I have like 4 or 5 people in the last 2 weeks that I kind of helped through this process, trying to figure out what Amazon will accept in terms of like addresses and EIN numbers and company types and things like that, so that they can get the store open, which is the most important part to them, is to be able to sell on Amazon. But that hasn't really come up for me in just in my experience in the last couple of weeks. I have another client I'm going to be talking to that's opening 7 new Amazon stores. So I can follow up YouTube, make sure to like and subscribe the video so you can be in tune, put that bell on so you can be in tune when we put out those next videos.
Yeah, and I think, to be clear and to be responsive to your question about whether you have liability or responsibility for providing the wrong form, I would say that the form that you file does not determine your personal tax liability. That just determines how they're going to withhold, or whether they're going to withhold from payments they make to you. But your tax liability is independent of that, even if they don't withhold anything from what they pay you, to the extent that you have a U.S. trader business and that income's effectively connected to that U.S. trader business.
Okay, so to
some responsibility to report that, pay tax on it.
So to summarize that last thought, because I think it's pretty important, I want to repeat it. If you give a W-9 to Amazon, it doesn't mean that you have to pay taxes in the U.S. necessarily. The IRS determines this based on your facts and circumstances, which is how they generally make their determinations, based on the facts and circumstances more than what's said or done, because a lot of people make mistakes. And especially if you're a foreign person filling out a W-9 instead of W-8, you have no idea what you're doing anyways, especially English, your second language, So yeah. It's all facts and circumstances. I think that's really important to reiterate on.
Yeah, and that's why I focus on 3 separate filing events. The first filing event is when you sign up and you have to provide this form that is going to impact whether the payor is going to withhold tax or not withhold tax. The second filing event, which we really haven't talked to, is at the end of the year, you're going to get some form from them. It's going to be a 1099-K reporting the amount of payments, or it's going to be a 1042 reporting the amount of payments, but you may get something that says, here's how much income you have. And that creates a lot of anxiety, because that is being reported to the IRS. And
it's 1099-K forms that they'll send out. This is how many sales you had. That actually, I want to step back one more second, ask you another unscripted, unplanned question about this. Your thoughts on the withholding, because so the W-9 tells you a U.S. person, so the company paying you won't withhold any taxes. If you give a company like Amazon a W-8 BEN, you tell them you're a foreign person and you're actually selling your own books on Amazon, Amazon will consider that royalties and they'll withhold 30%. I have clients that do that too. There's other companies, and this is where the question comes in. There's other companies like YouTube and I guess that would be Google, right? Google, and then I had a really good example. I had a caller who called me a couple months back on my Spanish channel, and he was getting paid for services from Nike and Adidas for doing different design services. One company withheld 30%, the other one didn't. So I see so much inconsistent application of what income, what payments are required to have withholdings on them and which aren't. And to me, it's clearly royalties, interest, dividends, rents, like those are the most common ones. But do you see this happening where companies are withholding taxes on like commissions or like services? Do you see that?
Yeah, I have, because I've actually run the tax departments and international tax departments of some large public companies. And these, any of these big companies are going to have payment flows going all over the place, right? Back and forth between foreign companies, back and forth between the U.S. and foreign companies. And the application of taxes is crazy inconsistent among the different rules. Somebody might treat something as a service and somebody else might treat it as a royalty. And,
Yeah.
and then the treaties come into play. And I don't want to like sink into that whole morass of characterization of payments, but it is ripe for inconsistency. But I will tell you, if you're a foreign person in that position and somebody withholds tax on a payment to you, so they pay you $100, they withhold 30%, you only get 70, you could actually file a tax return to the extent those services are rendered outside the U.S. You can file a tax return and get that 30 back, because that's a withholding tax applied to you. It's only a withholding tax. It doesn't determine your final tax liability. And so you can file a form and say, I was over withheld and I should get that money back.
And say it's not effectively connected income, and the IRS won't dispute, they won't say that this is actually the royalties, and they'll allow the refund?
Well, if it is royalties, then there is a 30% withholding tax, and that's appropriate. And you have to try to get it back to the foreign tax credit mechanism.
And I'm just thinking practically how you do that, because I actually have a client who was selling books on Amazon, and they withheld, and he sold a lot. So what I said was, let's take a position that this is effectively connected income and just pay graduated rates instead of 30%, even though I know royalties have to, it was from Argentina, so not a treaty country. And yeah. I said, like, the books are stored in the U.S., so it's U.S. source income. So
yeah, I mean, you can, like, we're going to talk about that next. It's like what creates a U.S. trader business. And if it's Amazon, it's going to be harder because they are pretty robust, in their analysis. And I think to the extent that you get a whatever form from Amazon, there's a withholding tax on it, and the government says, well, that's from Amazon. And I think there is some deference to their robust procedures, and that may be a little bit of a harder climb. There is a separate Form WA for income that's connected to a U.S. trader business. It's a Form W8 ECI, and Amazon will require that form to the extent you go through the tax interview process and you say, I have all kinds of activity in the U.S., or I do this, while I'm in the U.S., or they can require that Form W8 ECI. That's kind of rare. Mm-hmm. So they will try to make that determination. That becomes relevant to the next session. So maybe we should talk about, now that we talk about like a lot of bad things that can happen, let's just try to talk about whether you have a tax liability based on this fact pattern, whether this particular person could be expected to have a U.S. trader business that would create a tax liability, because chances are, to the extent that they filed a W-8 or W-9 to Amazon, they might not have withholding tax, but Amazon might not be aware of everything they're doing in the U.S. And they might have other activity in the U.S. And once you have a U.S. trader business, then U.S. source income, and that's a whole nother determination, can be attracted to that trader business, treated as effectively connected with it. So
yeah, so this is like I think the most nuanced portion of what we're going to talk about. When do you have to pay taxes in the U.S. if you're a foreign person with an LLC? And you're going to explain to me, I believe, there's the two concepts: the U.S. trader business and effectively connected income, U.S. source income. So, how do you distinguish the two, and what comes first? How can you explain that to me a little bit more?
Well, if you don't have a U.S. trader business, you will not have income effectively connected to that U.S. trader business.
So if you have no U.S. trader business, you don't pay taxes in the U.S. in this situation.
Yeah. So there are two ways that the U.S. can tax you: either something called FDAPI, which are like the royalties, or some other passive type income streams that they can just take the 30% or some treaty rate away from you. So you can still be taxed in the U.S. without having a U.S. trader business. A U.S. trader business is where you have enough activity in the U.S. that you have to report the income, and then you get to take deductions, and you pay tax on your net income, which is kind of conceptually how most people roll. They pay tax if they're running a business on whatever the profits are of the business and not the gross receipts. So that in some cases can be a good thing to have U.S. trade or business or effectively connected income, because then you can take all your deductions and then you might end up paying a lot less taxes. And this, by the way, this is like this huge kind of issue. I worked in New York in the financial services area at a large firm, and you have foreign banks doing business in the U.S., other financial institutions doing business in the U.S. through branches. They have effectively connected income. You have PE funds, you have hedge funds, and it's like the Lord of the Rings and, you know, the battle for Middle Earth going on with respect to when you have effectively connected income or U.S. trade or business. And if you're the supplement seller here on Amazon FBA, you kind of feel like this little hobbit is trying to avoid the swinging battle axe.
That's when I help clients fill out the, sorry to interrupt, when I help clients fill out the WABEN, you can see on the WABEN-E, there's like 50 different categories of types of company. And that's what you're referring to really, is on this 1042, on all those forms, there's like so many classifications. And it's, for most people, it's, and I say this in WAP videos, it's non-financial foreign entity. It's NFFE, right? Yeah. But I'll let you continue, because you're right. It is like, it's insane, the amount of classifications. And then you have to, after you classify, you have to determine what the business is doing. And it's a mess. Yeah, it is. And so you kind of like, as an Amazon FBA seller, just kind of want to keep your head down. Your best day is the day, you know, your perfect day is the day you don't hear from the IRS. I mean, you just don't want that interaction. You want as little of that interaction as possible, because based on what you're doing, in many cases, you're not going to have a U.S. trade or business. You're not going to have effectively connected income. Amazon's not going to withhold tax from you. So it's going to be a good day. But let's talk about this particular fact pattern and whether this collection of stuff is going to end up creating a U.S. trade or business for you. Great. So you have a U.S., you're selling on Amazon, okay? So they've gone through the process and they're not withholding taxes, let's say. You have this U.S. LLC. That is not itself going to create a U.S. trade or business. You might say, well, it is a registered entity under state law. Why wouldn't that be a U.S. taxable presence? Because it's treated as a flow-through entity. It's passed through. It's a tax nothing if it's a single member. The companies I worked with, we actually had LLCs in the structure between two foreign companies just for reasons, and probably legal reasons. Yeah, I mean, it did not create a U.S. tax filing obligation just because we used an LLC. Except for Form 5472, right? Form 5472. Don't forget about that form, Jim. $25,000. You know, I see that looked over mostly with people that own like a house with an LLC. It's like the simple stuff. People that have an LLC and they're not doing business, they just own it for to own property with. But I don't want to distract from this, because this is the meat and potatoes what we're talking about. Sure. So the LLC itself should not create a trade or business. I think I saw you mentioned the Transparency Act, and they're going to require beneficial ownerships to be disclosed for LLC. Yeah. I think part of that act, or discussion of that act, the government said there were like 2 million LLCs created every year. And so and most of those are by foreign, a lot of those are by foreign people. I don't know most of them, but a lot of them are by foreign people. And if LLCs were going to create U.S. trade or business, there would be a lot of additional forms filed. I think the IRS gets like probably 50, 60,000 foreign reporting forms from individuals and foreign corporations that have U.S. trade or business or file protected returns. So it's not 2 million or it's not 10 million. Oh, and that's 2 million a year. Yeah, that sounds about right. If the IRS got 100,000 to 5472s, I'd be like, okay, I guess. But and then your estimation of 1 million of them being created every year, it leads me to believe that there's a lot of people not reporting this form. Yeah, it's possible, but also if having an LLC created a U.S. trade or business, I think that would be a kind of retail crisis out there right now, and it's not. Yeah. Similarly with bank accounts, there is an old. So you ask yourself, well, I have a U.S. bank account, even if it's indirectly through an LLC, but it might be a disregarded LLC. So it's your bank account. Does that create a trade or business? There is a old IRS GCM, which is an internal communication that some people use to scare other people about having a trade or business. And it says, anything beyond the mere receipt of income and payment of expenses can constitute a U.S. trade or business. So that's like this hair trigger of creation of trade or business. But what's interesting is it does carve out one safe harbor.
that the receipt of income and payment of expenses going through, for example, a U.S. bank account is not going to be U.S. trade or business. There are court cases from like quite a while ago
A
that
lot of
also
court cases.
reach the same conclusion that a U.S. bank account is not implicitly going to give you a U.S. trade or business.
Yeah, that's
Sorry,
been decided in the courts a couple of times in a couple of different cases. So
yeah.
that's what I tell people. Like, look, it's court precedent. It's the best. That's the best precedent to go on.
Yes, exactly. And these court cases are very old, so the IRS has kind of lost interest in making this case over time. And this is such a common structure that, again, if this was a problem, it would be a problem on a retail scale that we would have heard about. Mail forwarding and using Skype numbers are extremely common. The thing about mail forwarding is you may at some point have what could be said as inventory or merchandise in the United States at the mail forwarder, bits and pieces. Generally, to have a U.S. trade or business, your activity has to be regular and continuous and meaningful, non-ancillary. So you wouldn't expect mail forwarding to by itself be an issue, or Skype. So that leads us to the inventory, which is really the third rail of having a U.S. trade or business. And what kind of guidance is out there to tell you whether having inventory in the U.S. is a problem or not a problem? Publication 519, the U.S. Tax Guide for Aliens, which is kind of right on point to our Mexican fact pattern here, says if you own and operate a business in the U.S. selling services, products, or merchandise, you are, with certain exceptions, engaged in the U.S. trade or business. That also suggests a fairly low bar to have a U.S. trade or business. The U.S.-Mexico tax treaty, though, says that maintenance of a stock of goods or merchandise solely for the purpose of storage, display, or delivery is not going to be what they call a permanent establishment. A permanent establishment is a concept in a treaty that really supplants the trade or business determination and sets a higher threshold before you become exposed to U.S. tax.
So what I look at the treaties is if you don't have a tax treaty, you're relying solely on the interpretation of the tax code. But what the treaty does, for people who don't understand the concept, the treaty is really an explanation of how the tax codes are going to be implemented between the two countries. So with this treaty, we can see, and like you said, you reference a treaty because in the fact pattern, the guys from Mexico, we have a treaty. So the treaty says that he can have inventory without being a trade or business. So what if he was from Argentina and he doesn't have a treaty to rely on? Would you be a little bit harsher in your determination of what's a trade or business?
Yeah, you have to be, and I think that, and I've written memos on this in my history of working in the tax area. This is a significant determination of whether inventory in the United States is going to constitute a U.S. trade or business. And even where you have a treaty, it says solely for the purpose of storage, display, or delivery. And some people kind of say, well, that's if I'm making the product in the U.S. and then it goes into a warehouse until it can be shipped to me. I'm just storing it in the U.S. and I shouldn't have a trade or business. But if you're picking and packing it out of the U.S. warehouse on an order-by-order basis, that's where I would start to get concerned. This is interesting because we've talked a lot about Amazon FBA on this call and the determinations they have to make and the importance of them making these determinations accurately. And we've talked about how through the Seller Central process, they conduct a tax interview that asks a lot of questions about what you're doing or what you will be doing in the United States. And if you kind of answer those questions no, or enough of those no, they will accept a form W-8-BEN from you. And they won't require you to do a W-8-ECI, which says I have a U.S. tax liability. So they will accept a W-8-BEN and not treat you as effectively engaged in the U.S. trade or business through their tax interview process. I mean, this is not the IRS making this determination. This is Amazon making the determination, but it's a big company that's putting a lot of thought into this exercise.
And there's a lot of people that the IRS would have to look into anyway. So the IRS has to exercise some kind of trust to filter this out because it's really impossible, especially with their staffing, to check every single example. They can't audit everybody, so they have to go by something. And if Amazon's going to be the company that they're going to trust, because of their history of compliance and their amount of research and their initiatives to stay compliant, then that kind of gives more support to it. So the determination that is kind of, if Amazon says you're not doing a trade or business, the IRS will trust Amazon's determination, is what we've been seeing.
I mean, I feel like that is a reasonable, basis on which you can kind of carry on your business. So if you're this person in Mexico, and to me, Jim, what's really interesting about this is Amazon is willing to conclude that you don't have a U.S. trade or business, and they hold your inventory. They have your inventory in their warehouses. So if having inventory in an Amazon warehouse was a problem for trade or business, they have all the information to make you fill out the W-8 if it is in fact a problem. So
but they have, I kind of look at it a little bit differently. Well, from a different perspective. I agree with your conclusion, but I kind of look at it as Amazon is an independent agent who's taking control of the inventory and managing it for you. And since they do it for, actually like millions of, probably hundreds of thousands of companies, then it's not like you are engaged in a business because you're contracting with a company that does that.
Yes. And I totally agree with you. That is the rationale behind why they reached this conclusion. But the fact is that they have reached the conclusion. You and I speculate. You made a very articulate case for why this inventory shouldn't create a U.S. trade or business. You and I could speculate on that. We don't have to. I mean, Amazon's already, nailed that one down for us. And, at least there's something you can point to that says, if you're going to sit around and worry about, the IRS placing a lien on your inventory or this or that, I mean, at least you've got something here that can help you out a bit. Now,
yeah, and you're working with advisors. You've done some due diligence, and the IRS really likes that too. If the IRS audits you and you're working with people and you have thought behind what you're doing instead of just throwing stuff together, in my experience, the IRS likes that a lot.
They only have 70,000 employees. Yeah, and they have 250 million customers. I mean,
well, if you're going to count every single foreign person with an LLC, they have way more than 250 million customers.
Yeah. Yeah. No, and they got a lot of other things that they have to do. So I think it's really to the benefit of all. And certainly the IRS could always come out and say, look, we disagree with this approach. They don't typically do that kind of thing. They could audit people, even if Amazon's chosen not to treat them as effectively connected. Like I say, Amazon's determination is not the end of the story. You have your obligations to file tax returns if you're the Mexican person in this case. And again, Amazon doesn't know everything you're doing. So let's take a situation where in addition to the Amazon FBA, you're selling on eBay.
Perfect. I wanted to go into more examples because the people that talk to me, sometimes they work with a different fulfillment center, or they'll rent their own warehouse, or they'll use a family friend to ship and package stuff. Those are the three scenarios. And I think they get increasingly more, you're doing a trade or business toward the end of it.
Yeah. No, you may not have those protections. And even in the case of the Mexico treaty, can you say that merchandise is solely for purposes of storage, display, or delivery? I think if you're picking and packing, if maybe it's in your uncle's garage in Colorado, right? And you call your uncle up and say, hey, I just sold another 6 packs. I need you to send it here. You're picking and packing really the orders one by one. That's
a dependent agent. That's what I say. The argument of independent agent like Amazon, if he's only doing it for you, he works for you and he's doing U.S. business and everything he packs is U.S. source income.
Yeah. So let me kick this one back to you because I think some advisors talk about because they're concerned about and rightfully concerned about this issue of inventory in the U.S. and say, well, set up a separate C corporation in the U.S. to own the inventory. Therefore, you don't have the inventory. The C corporation has the inventory. You want to comment on that?
Certainly. So that's the only kind of advice you get working with someone like Peter or myself, that where you can get some kind of advice on how to do this, because everything is so nuanced and so complicated, even though we're talking like 20 concepts, right? So what happens, and I'll give you an example. I have a company or a client that they're based outside the U.S. They did it, the Canadians have it the best because Canadians can keep their passport and expatriate and not pay taxes in Canada anymore. So they have it the best. So they're living in like the islands, I don't know, the islands somewhere, and they do not Amazon fulfillment, but they do, it's kind of like drop shipping, but they take consignment of the inventory in the U.S. So they're kind of selling online for a U.S. company. And these guys, in their contract, and we looked at their contract, they take possession of the goods after they're sold, and then it's delivered to the client. So they wanted to avoid all risk of this potentially being checked in the future. So what we decided to do to be more safe is use a C corporation. A C corporation is a U.S. person. It pays tax in the U.S. on worldwide income, just like I do, and it's kind of falls like you're paying tax. You're reporting everything in the U.S. And this way, there's not going to be any determination of you should have been paying taxes because you are. But the way that they can mitigate a lot of their tax responsibility is pay themselves management fees. And I go over this in my course a lot about how like a lot of the differences between this. But they pay themselves fees because they live outside the U.S. and they're doing all of the work to drive these sales and drive all this. So there's not a transfer pricing issue because they're not selling it to themselves. They're literally just buying from a supplier and selling to the internet. They're providing marketing services more really what they're doing, but technically they could get roped into the U.S. trader business because of inventory and all of that. So that's what they're doing. They're using a U.S. corp and they're paying themselves out high management fees. So there's a pretty low margin on the U.S. corp, which is pretty reasonable because they're doing all the work from overseas, and they don't want to be trapped in having U.S. trader business and never having paid taxes or filing the wrong way.
Yeah, I think that certainly the larger companies I worked with, that was a strategy to quarantine your local assets or certain local activities to keep, your whole organization from being sucked into the vortex of having a taxable presence in this country or that country. It's more difficult when you're this particular person who's doing $120,000 a year on nutritional supplements, and that is really not a scale enough to be setting up C corporations.
It's just the cost of compliance gets higher because you have to be more, you have to report more, and you have to really be a little bit more on top of it. So the cost of compliance is a little bit higher, and you have to tell the IRS everything. So yeah, you're right. It's like a little bit more than a lot of people want to do because the LLC is fast, it's easy. But the C Corp is really, if you want to have a presence in the U.S., you need a C Corp to separate your business, especially if you're doing real business physically in the U.S. and physically in another country. The C Corporation is much better because you kind of have straight lines as to what business is doing what and where.
Yeah. And I think this issue, just to kind of like wrap this up with one final point, observation, is if you have a scale issue, you want to keep your head down. You don't want to, Amazon's not withholding. You have to decide whether you have a trader business. You've got a small amount of inventory in the U.S., maybe it's not with Amazon through the FBA. And you're deciding whether to file a U.S. tax return or not. Just, again, kind of think about the consequences of not filing and then being held responsible for having a trader business and how that can itself be a very large controversy type of issue. So do you want to file a 1040 NR year by year just on a protected basis? And the IRS gets 40, 50,000 or more protected returns every year, which basically zeros because it's just people wanting to preserve this ability to claim deductions in the future or start a statute of limitations, possibly. And that's what do you think of that, Jim?
I think that, you don't lose anything from filing a protected return. You lose a little bit of time, maybe a little bit of money and paying someone to do it, but because especially the foreign corps. But I think this is mostly prevalent, and especially in the court cases in the past, and all the examples I've seen, it's been really mostly prevalent for foreign corporations and foreign businesses who are doing business in the U.S. instead of more foreign individuals, because the IRS seems to throw the book at these foreign corporations who never filed protective returns. And I know a court case, and then you shared one with me last week about another one that was pretty recent. And I don't know if you want to get into that a little bit about like how the IRS views a trader business if you're a foreign company And then also, this case was crazy because they were using satellite imagery and they were using all this crazy technology to determine tax liability. I imagine it was a pretty big operation there that they were dealing with. You said offshore stuff. So I'll let you, I guess, elaborate in kind of this case and what happened and then why you need to file a protective return, especially if you have a foreign corp owning your LLC.
Yeah, I mean, it's almost like every few years, one of these cases comes along that just gives everybody the chills. And it's not necessarily this case or that case. There's been a pattern of these cases. And I would always, talk to people. I lived overseas for a while. I talked to a lot of foreign companies doing business in the U.S. And we would talk about this and they say, practically, what is the kind of actual enforcement in this area? And I said, well, I call this often discussed, seldom enforced, because you do get these cases every couple of years or so, but it's still really hard for the IRS to make this case. And I think a more interesting, maybe this is for another video, is an actual process the IRS went through to collect information, these 1099-Ks, customs information, sales tax registrations, all the different kind of trails you leave when you're selling business to U.S. customers. And the IRS went through in a sense, test process to try to collect a lot of these bits of information and then send letters to the people that they could connect this to and say, what are you doing in the U.S.? Tell me a little bit more about what you're doing in the U.S. And you would think that they would do that. You would think that if this is the IRS, 250 million customers, you would think that if they were to do that, they would do that on a pretty large scale. That whole kind of sample or that whole exercise was done around a sample set of 50 companies, 50 taxpayers. And they sent a letter to 50 companies. And
like my odds.
Even then, and then they kind of, like, according to the report that was issued on it, they kind of lost interest in the whole process at some point, or maybe they concluded that this was a bit of a dead end. I don't know. But certainly we all leave a digital trail. I deal with this in Puerto Rico and how many days do you spend in Puerto Rico. Everybody leaves a digital, a carbon footprint or whatever, a digital trail. And with this new transparency, LLC transparency law and registrations of this and registrations of that and importation of this, everybody's leaving a trail. And so, yeah, often discussed, seldom enforced, but if it happens to be you that gets one of these 50 letters or you that's the subject of the...
Call Frost Tax Law.
No, then it's not a good day. We've talked about what a good day is. That is not a good day.
No, it's not a good day. Call Frost Tax Law because you guys are definitely better at controversy. I don't do much of that stuff. And it's, you got to be on it because that's what happened to some of these, especially in this example. The IRS sent notices, requested information, and the company ignored the IRS notices. They didn't give them any of the information, and they filed the protective forms like 3 years late. The IRS threw everything out the window and assessed tax on the gross. And this is really tough in some of these like low margin businesses. Like the case that I read in the last one I looked at was the yacht dealer in Miami who parked his yacht in Miami. So it was a U.S. trader business, and they assessed it on him. But he sold a yacht for $20 million, but he bought it for 15. His gain is 5, but he's paying tax on 20. So he's screwed. And that's because he didn't do his due diligence, his taxes. But the example you gave me was worse because they had like a chance to follow up and kind of fix it, but they just didn't respond.
Yeah. And there was a lot. I mean, there were 2 separate court cases, one talking about whether they had the trader business and the impact of the treaty. And then the whole second one is procedurally, do they get to take deductions? And kind of lost everything. So, and really, if you're in this situation and you're this Mexican person and you're already filing a 5472 and 1120 for the LLC because you have to, why not just file a 1040 NR as well, right?
But from my experience, this is code section 802 that we're talking about where it disallows expenses when it wasn't unfiled return. In my experience with personal returns, that's not really the case because I deal with the personal tax resolution for U.S. people. And if someone doesn't file a return, you can take expenses like 10 years later. I guess that when you file the original return, is that still the same risk for a non-resident?
Yeah, so I had to look this up. I just needed to kind of be prepared on this because most of these cases involving what you're talking about, the yacht owner or the recent case, we could discuss, involve foreign corporations.
Yeah.
That's what section 872 or something.
Eight something. No one's gonna look it up anyway. So
there's whatever. How dare I forget a code section? That's shame on me. But there is a similar rule, and this is the one I had to look up because I go like, well, I wonder if there's a similar rule for U.S. for individuals because I've never worked a lot with individuals. And there is under section 874. There's a rule that says the same thing. If you don't file tax returns, don't expect to be able to get.
And that's for foreign. That's for foreign individuals, right?
Exactly. Specifically for foreign individuals.
Specifically for foreign individuals. Okay, because it doesn't. It's not. The rules don't really apply for U.S. individuals, in my experience, because people just don't file, and then the IRS assess a tax, and I'm amending or filing an original tax return for 15 years ago. I don't know how the IRS verifies that information or whatever, but. Yeah. And they accept it. So I guess, so what code section was that? I have the video.
Section 874. Let me tell you the, put this on pause. I have it written down. 874A, section 874A, and section 882C2 is the corporate provision to allow you to claim deductions.
Well, I'm going to start filing a couple more non-resident tax returns, protective returns this year, because I definitely have some people who are pushing the envelope with their trade or business determinations. And
maybe you can offer the FBA bundle where you'll do the 5472, 1120, and a 1040 NR.
Yeah. Well, what I find is people come to me and they're like, and they come to me, they say, oh, everyone else says everything's a trade or business. So that's what happens a lot with, like local tax preparers, other people, they just make the clients pay tax on everything, no matter what they're doing. Like there's no analysis into it. I mean, they're just tax preparers, right? So they're filing a 1040 NR and a Schedule C and making people pay taxes. So a lot of people think they have to file the 1040 NR to pay taxes. When you're saying we should file it protectively, I mean, if there's no U.S. trade or business, and that's great insights.
I went on in one of the forums for Amazon sellers. I don't recall if it was a Reddit or what it was. It is like chaos out there with all the different perspectives, and this person told me this, and that person told me that.
Every time I talk to someone, they're like, "Oh, well, I heard this from this guy." I'm like, "Okay."
I feel so kind of, I don't feel bad. I don't know how I feel, but for someone who's trying to get this kind of information off the internet through forums, good luck. I mean, it's almost like whatever you want to hear, somebody's saying it, but does that make it right? I don't think it does. I mean, the IRS, if they come in and say you got to trade your business and you show them like a printout from some Reddit forum, it's not going to cut it.
Look, I'm not. Look it says it right here.
Here's my authority.
Wall Street bets. I'm not subject to tax. Yeah, that's right. That's why when I try and make videos, I try and reference the code because other people, like that's what happens. They said, this guy told me I have to pay tax. I'm like, why? Can you ask him for a reference or an explanation? And they're like, they said, because I have to.
Yeah.
Okay.
Yeah. Yeah, no, and again, that's why I like what you do, because it's thoughtful, it's well supported, and it's based on real life fact patterns.
Likewise, and I think this is kind of getting towards the end, and I just want to say thank you so much for being on here and helping me elaborate with this stuff, because it's really reassuring for me to have a professional like you, a little bit more experience for me, and you're also probably do a lot more research than I do, coming and kind of verifying what I've been saying to the people on the channel and to kind of elaborate much more. So there's an extreme value in this video, and I really appreciate you coming on the channel.
Well, and again, thanks for having me. And I think that we do these videos, you do these videos, I do these videos, and part of it is marketing, but part of it is that we appreciate the challenges that this hypothetical Mexican person faces when they're trying to make a buck, and they're taking enough risk in their business, and Amazon's taking a big fee for everything they do, and you know, and then they have to worry about federal income tax, state income tax, state sales tax, self-employment tax we didn't even talk about,
Yeah.
duties, customs duties and things. And just there's a world of regulation out there that is really
Oh, I have one last thing. I want to cut you off because I did have a question I meant to ask earlier. What and went back, just time machine is back to the trader business discussion. I have a couple clients asking me recently, they want to hire contractors in the U.S. who
yeah.
do different things. And I said a contractor on its own doesn't make you have a trader business, but it really depends on what they're doing and how they're doing it and what authority they have. Can they enter into agreements and contracts and stuff like that? Do you kind of agree with me there that
Yeah,
it doesn't necessarily?
no, it's not. It's not fatal. I mean, it's kind of like you setting up your own distribution company to hold your inventory. You're trying to put a wall at the border and say, that's not me, that's that company. And so the same thing with respect to contractors, you're saying, that's not me doing that stuff. I mean, that's Amazon holding my inventory or,
Yeah.
you know, somebody else.
But it's there's distinctions as if they're entering into legal contracts for you and if they're operating on behalf of the business instead of just like providing a marketing service or maybe just like calling people or whatever. Like, so I think it's a little bit tricky, but you know, it's like you said, it could go either way. It could be like the Amazon example where they're just doing something, but it's not your whole business. But
Yeah.
I think it could also be if they're entering sales and they're meeting clients and stuff, then it could be a trader business.
I agree. I totally agree. I think that, to me, we talked about inventory being the third rail. I think that giving somebody the authority to negotiate and conclude contracts in your name, you know, the name of the foreign entity, is really, really walking the line. I mean, it's almost like you are just falling over the line at that point in time.
Yeah, you're just picking up the line, pushing it back. And
there are a lot of cases out there, like with insurance agents. You know, you can have a foreign insurance company that is going to sell insurance products. They're using agents in the U.S. And the question is whether these agents are going to bring the insurance company into having the U.S. trader business. And certainly you want to rely on treaties where a treaty can help you out. But most treaties are not going to bail you out if somebody in the U.S. has your authority to conclude contracts on behalf of your foreign entity and is not you know, doing that for a whole bunch of other people too. Kind of a independent.
And so many of my clients are coming from non-treaty countries, especially like right now, Argentina and Peru are pretty big for me, at least, because there's a lot going on over there. But I could talk to you all day, Peter. I really appreciate your time and I value it. And let's do this again. Everyone, if you're still watching this video, I hope your brain hasn't exploded by now. Make sure to like and subscribe this, like the video, subscribe to the channel, and also go down to the Frost Tax Law channel and check them out because Peter puts out some great videos himself.